two massive secular trends that dwarf all others. Crypto. Here's the chart, the long-term chart of Bitcoin since 2013. Some people use this chart longer term, I used to, but the early cycle was so kind of ridiculous that it screws up the chart. Other than that, it's actually a perfect log trend. And as you know, we think the business cycle peaks sometime in end of 2025. And that would suggest a crazy sort of target that could get somewhere between $500,000 and $1 million in Bitcoin. Do I expect that? Probably not, but who the hell knows, right? These cycles can be crazy, and this one feels more like the 2016-17 cycle than it does the prior cycle. And that cycle didn't have a lot of central bank printing. Well, not in the US, but central bank balance sheets were rising. We saw 20% growth, and what happened of liquidity, and what happened was crypto absolutely exploded.
Welcome back to Money 101. Raoul Pal recently brought attention to two noteworthy long-term trends within the crypto landscape. Expanding on Bitcoin's logarithmic trend dating back to 2013, he hinted at a conceivable, albeit improbable, target ranging from $500,000 to $1 million per Bitcoin by the close of 2025. This forward-looking projection is rooted in an analysis of historical market cycles and the actions of central banks. Now, let's contextualize these observations with the most recent data and analyses. Notably, the crypto market, particularly Bitcoin, has displayed remarkable resilience in the face of global economic uncertainties. The continuous evolution of blockchain technology and the growing embrace by institutional players further fortify the potential for substantial appreciation in Bitcoin's value. Nevertheless, it's essential to factor in the inherent volatility of the market and keep an eye on regulatory developments that may influence this trajectory. If you're enthusiastic about staying well-informed in the dynamic realm of crypto, be sure to subscribe and hit the like button. Join us on this insightful journey as we explore the unfolding trends together.
NASDAQ, another beautiful logarithmic trend. I mean, this is a killer. It's all you need to know. Is the world going to be more digital tomorrow than it is today? Yes. Will it be more digital in 2 years' time than it is today? Yes. Will technology reach more adoption in the coming 2 years? Yes or no? Yes. I ran that poll on Twitter, 95% of people agree with me. Yet most people keep missing this trend. They don't want to believe it. It's expensive, I think it's a bubble, blah, 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 blah. Meanwhile, best fucking trend you've ever seen. So just capture the trend. It suggests the NASDAQ somewhere between 25 and 30,000 at the end of this cycle. That's another great set of returns. So those are the two mega trends. How do they compare? Well, simply put, going back to 1990, kind of the dawn of the internet and computing ages, the NASDAQ has just relentlessly outperformed. All of the noise you see on Twitter, mean reverting, the NASDAQ's expensive, blah, 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 blah. It is the biggest trend you've ever been given. And many of us in macro land didn't see this. We kept fighting it because of what happened in 2000, the bubble and bust. But that, as you can see, was extraordinary. The rest, super smooth. It's the same log trend, and I don't see that changing. Could we create another bubble based on AI and the exponential age? Sure. Let's make some bloody money from it, as George Soros would say. But I don't see any elements of a bubble. It's just a normal trend that eats all other equity sectors alive. There is no point owning other stocks. Every other bet is suboptimal in this world where everything is correlated. So if you're going to take bets, buy the NASDAQ. If you want to outperform the NASDAQ, buy the semis. If you want to outperform the semis, buy the exponential age basket. Simple as that. Go back to the NASDAQ S&P chart. It's outperformed the S&P since 1990 by about 5% a year. That's including the crash. If you go on the recent trend, it's about 13% a year. It absolutely crushes the S&P, the Russell 2000, cyclical stock, commodity producers, commodities themselves, all of it. So it's a really simple thing. You don't have to do a lot. You can be the moron on the left of the bell curve or the genius on the right. Just don't be in the middle of the bell curve. Don't be the midwit. Just keep it simple, stupid. Technology going up. The world is getting more digital. When we look at the Bitcoin chart versus the S&P, it's even more stark. since 2013. So we're not even cherry picking the really, really early dates. But it's been outperforming at 88% a year. It's crushed it. Now, considering it is also highly correlated to liquidity, it's all the same cycle. Then this is the horse you back. You back the fastest horse, which is why my bets lie mainly in crypto. Because they're all the same bet, and risk-adjusted returns in crypto are much better than anything else. But you have higher volatility. You may not want the higher volatility. You'll still capture returns. But this is where you get the excess returns. So, that's the power of a secular trend. Now let's put them into the everything code. Again, I talked about the fact that the ISM is a repeating cycle since 2008 because of the debt refi cycle. So future ISM looks like past ISM inverted. So it suggests that we keep going into 2025, the end of 2025, which I've shown you a number of different formats. And with that goes liquidity. I showed charts earlier how liquidity and ISM all go hand in hand. There's the chart of global liquidity, and the NASDAQ just keeps going up. What a beautiful chart. That's the trend we're trading here. It's easy. Same with Bitcoin. The reason the Bitcoin correlation is actually lower than the NASDAQ is because of these super spikes on the upside, because it's so skewed to the right tail, which is amazing. So now when we put this all together, we can actually forecast using a number of proprietary things we use at GMI out into the future. Please do not expect this to be a crystal ball. Do not expect these exact targets. It's directionally going to give you an idea of what the next 2 years look like. It gives you that target that we talked about before of about 21,500 in the NASDAQ by May or June of next year. It kind of looks like it kind of holds a bit after that. Maybe there's a correction, maybe not. Maybe it dislocates a bit. As you've seen, there's plenty of parts on the chart where liquidity can correct a bit, but the chart keeps going. That's 2015, for example. That was typical then. But by the end, it says the NASDAQ would get to about 27,500, which is exactly where that log chart showed it as well. So I like it when certain things come together. So basically, all you need to take from this is there's plenty of upside to come. Of course, there'll be ups and downs, but in end of 2025, you'll look back and you'll have come a long way. And that is a great trade. With Bitcoin, it gets even more interesting. It gives us a kind of extraordinary set of numbers, which make me think that these are overstating it. So I'm just going to assume that we'd halve these. Maybe they're right. I don't know. We'll have to see. The everything code is new. You know, yes, it's worked in the past, but who knows? Because it gives us crazy numbers like 218,000 by May. That's post-halving, post-ETF. It would give you a target of $500,000 by 2026, which is in line with the log trend. So it's possible. Doesn't feel like the most probable outcome. Feels a bit ludicrous to me. But anyway, directionally, half the numbers. Assume Raoul is a total moron, which certainly my wife would do. Then you still get great numbers. So it's all to play for. And that makes me interested.
Raoul Pal shares his outlook on the NASDAQ and Bitcoin, emphasizing that these insights should be viewed directionally rather than as absolute forecasts. He discusses the potential for the NASDAQ to reach approximately 27,000 and Bitcoin to exhibit remarkable figures, acknowledging that while these projections may appear ambitious, they align with long-term trends. In the realm of investment, forecasting is a nuanced combination of science and art. While data suggests substantial growth for both NASDAQ and Bitcoin, it's crucial to approach these forecasts with a well-balanced perspective. It's important to recognize that markets are influenced by a multitude of factors, ranging from technological advancements to global economic shifts. In conclusion, as we delve into these intriguing trends and predictions, let's remain informed, adaptable, and open to the diverse possibilities the future may unfold. Thank you for tuning in. Remember to subscribe and like this video for more enlightening content. Until next time, make savvy investments and keep your mind sharp.